Look at the incredible seesaw-like action in Zillow today, the biggest online repository of home values and home listings out there. This morning, Zillow, letter Z, cut its full-year revenue guidance, saying 2015 would be a transition year because its acquisition of competitor Trulia took longer than expected to gain that FTC approval to be able to close. It's now been 8 weeks since the Trulia deal closed, and the combined company indicated that the estimates need to come down. Initially, Zillow got slammed, plunging nearly $12, but the stock rapidly rebounded and ultimately ended the day down just at $1.29. Why were investors willing to shrug off this bad news? I think a huge part of it is because Zillow stock had already declined dramatically from $160 last July to $92 as of yesterday. At these levels, this dominant online real estate play is simply too cheap given the size of the market opportunity here, regardless of any short-term missteps. Don't take it from me, though. Let's check in with Spencer Rascoff, the CEO of Zillow, to hear more about how his company's doing and where it is headed. Mr. Rascoff, welcome back to Mad Money.
Thanks, Jim. Thanks for having me.
All right, Spencer, first of all, did you really, do you think, need to give this update, given the fact that when you reported in May, a lot of people obviously would have said, of course that's what happens when you have a delayed acquisition?
We wanted to come out today and give this operating update because it's been 8 weeks since the closing of the Trulia deal, and we had a lot of news to share. We've integrated important parts of the product in rentals, mortgages, and display advertising. And we've achieved listing independence, which means Zillow now has MLS listings from nearly every part of the country, and that improves listings quality. So we had a lot of information to share, not the least of which, of course, was our latest understanding of the full-year financial results.
Did you lose any business to competitors like News Corp because of this deal?
No, I don't think that competitive changes have impacted the business. What's happened really is during the prolonged FTC review process, the Trulia core business lost a little bit of momentum in terms of audience growth and ad sales. And we've already made the necessary changes to reignite that momentum. And I'm quite confident that the core story here, the thesis is intact, that Zillow Group will end up, and we intend to end up, capturing the lion's share of the $13 billion in real estate-related advertising. We're just trending a couple quarters behind. 2015 is going to be a transition year, and the long-term story of 2016 and beyond is still very, very bright.
Now that you're inside, are the cost savings going to be as great as many of us were hoping when you put these two together?
They are. When we announced the deal, rather, last summer, we estimated about $100 million in annual cost savings and cost avoidances. We're still on track for that in 2016, and we're well on our way. So yes, I still feel very good about the synergy numbers that we've given to investors.
Integration between the two different systems, not easy. You said not easy in the conference call, but where are you versus where you thought you'd be?
Way ahead. We've done so much in the last 8 weeks, much more than I ever expected. As I say, we've integrated core parts of the product. So, for example, the rentals product on Trulia is now private label powered by Zillow. Mortgages on Trulia is private labeled by Zillow. And we've integrated our core operating system. So our HR, our finance, our IT ops systems, all of the kind of inner workings of the company have already been integrated just within a couple of weeks. It usually takes companies quarters or years to integrate those types of things after a large-scale M&A. The big enchilada, the most important thing, is integrating our agent ad business, and that's going to happen by the end of the year. And that's why I call 2015 a transition year. Once we complete the integration of the agent ad product by the end of the year, we'll be very well positioned for 2016. All
right, Spencer, I know you watch the show. I know you watch what we do on CNBC. I have been talking about the idea that there are some companies that if they were private, they would have valuations that may be well in excess of what they are now. If you put the two major companies that do what you do together, and they're both private, is it a reasonable assumption by some that the company, which is now valued at $5 billion, might be valued at $10 billion in the next financing round?
Well, it is true that there are probably 80 or more privately held companies worth more than $1 billion. And the reason is that venture capitalists are eager to put money to work. They're driven by a fear of missing out, and so they tend to bid up these high-growth private rounds in late-stage high-growth companies. From Zillow's perspective, I think there are a lot of benefits to being public. I don't regret being public at all, even on volatile days like today. I think it really forces a company to improve their operational chops. It gives us the ability to issue stock, such as in the case of the Trulia acquisition. So as long as you don't let the near-term, the short-term fluctuations drive you crazy, and you can focus on the long-term, I try not to let the private company, public company valuation disconnect make me go nuts. Instead, I focus on the 5 and 10 year outlook for the company, which I think is very, very bright. Over the long term, those short-term valuation disconnects tend to fix themselves.
All right, what do you say to people who say, well, wait a second, I think there was a downshift in the U.S. economy. Maybe what Spencer's doing is trying to cover up from something, some slowdown that he just doesn't want to own up to right now because he's made this big combination.
Look, there's a lot of work to do for Zillow Group in 2015. We have to integrate these companies further, and we've got to reignite Trulia's core product, and most importantly, we have to integrate the ad products, the agent ad products across these two brands. That's what this year is all about. If we're able to do that successfully, and we're well on our way, then I think we'll be very well positioned for 2016 and beyond. There's no macro real estate or macro economic issue that's impacting our business. Instead, we're just trending a couple quarters behind where I think investors expected us to be. And that's because, as I say, of the prolonged FTC review process, which is now behind us, and we're off to the races now. It's just going to be a choppy year as we finish 15 and get into 16.
One market that I really wanted you to be in when we saw each other last year to dominate was rental. It looks like that is something that has dramatically changed for the better for the new Zillow.
Yeah, I mean, Zillow Group is poised to really go after the rental advertising addressable market, which is a couple $2 billion. Zillow Group operates the largest rental network on the web between Zillow, Trulia, and HotPads, and in New York City, StreetEasy. We have the largest rental audience. And now Zillow Group is selling real estate advertising to apartment buildings, to multifamily, on behalf of all of these different brands together. So we're very well positioned. We have a lot of work to do in 2015, but we have the audience. Eventually, advertisers follow audience. And I really like our chances to go after that real estate and rental-related advertising market.
And I really like how straight you're playing it. I thought it was terrific that you came out and did what you did. Didn't know whether you really had to, given the ultimate valuation of the stock, which seems low to me. But I want to thank you, Spencer Rascoff, CEO of Zillow Group, for coming on Mad Money tonight.
Thanks, Jim. As always, a pleasure. Thanks for having me.
Guys, if you look at a private market value of this company, if you look at what this company could mean to a Yahoo, to a Microsoft, to a Google, you know that it's probably worth more. But in the public market, he said it, transition year. Don't expect breakout numbers in 2015. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.